Hey, what's up, everybody? Welcome to the Average Joe Dividends YouTube channel. It's Monday, so you know what that means. It's time to buy some more dividend-paying stocks. If you've been following this journey, welcome back. If you're new to the channel, please subscribe so that you do not miss future videos. Also, please click the like button to help grow this channel and get the word out on dividend growth investing. Getting paid just for owning stocks. This is what dividend growth investing is all about. This is my weekly buy video. And what I do is I deposit $100 my own money, and I let the portfolio do the heavy lifting for me going forward. All dividends received are reinvested back into the stock from which it was received. My goal is to put this money to work for me in the long term to build a growing and reliable income stream. I'm a long-term buy and hold investor who focuses primarily on individual blue chip stocks as well as ETFs and CEFs. What we're looking at right now, this is my M1 brokerage account. And this amount right here, this includes my IRA as well as my taxable account. And we'll just take a look at the 1 month performance. We can see we're down a bit. We were up to 878. Now we're down to 850. We're as low as 825, but starting to rebound just a little bit. And we'll go into invest here. Click on this. This will show just my portfolio that is taxable. I'm not sure if you guys want me to go more into what I have in the IRA or not, but it seems like individual stock investing just has a lot more interest. People are more interested in that than boring old ETFs, because that's what I mostly have over there in my IRA. So we'll take a look at the performance of this portfolio. Pretty much the same as everything with the IRA and the taxable combined. You can see over the last month we've kind of dipped down to 228, and we've recovered back to almost 236, right around there. And we were at highs of over 240 not too long ago, just in the beginning of April. So next what I'll do is I'll go to the activity log, because we want to see what those buys were. And in this case, I didn't have any more dividends to drip in. Those are already dripped into the portfolio on the 25th of those two buys here. So it's just going to be the $100 going to work for me. And what I do is I pick 5 companies and I put $20 into each of those. And I'll show you those and I'll read those off. And first up, Starbucks. I think they're a long-term good buy. Southern Company, this is a utility. I think their revenue and things like that are pretty stable. They also pay rising dividend, as well as Starbucks, McDonald's, Union Pacific, Hershey's. They increased their dividend year over year for quite some time. Then next, McDonald's, then Union Pacific, and then Hershey's. And I think as of late, Starbucks and Hershey's have been struggling with their stock price, and I really think they're a good long-term investment. Of course, what I'm investing in is not investment advice. So I just want to show you guys what I'm doing. And next what I'm going to do is I'm going to go to a Google tracking sheet, and I'll leave a link below. You're welcome to use this, and this will track everything that's in my portfolio. And I'll show you really quick just the holdings tab. We're going to have to use this in just a bit, because I'm also going to update the Google sheet I'm about to get to, and it's going to affect my dividend income. Since I bought fractional shares in those 5 companies, my dividend income is going to go up as a result. Of course, the $100 too adds approximately $100 to the portfolio, depending on whether we've had an up or down day today. So I'm jumping over to the Google Docs spreadsheet. Again, I'll leave a link below. You're welcome to use this. And of course, if you have different company names, you'll have to put in your own company names and change the ticker symbol, things like that. But the share price uses a Google Finance function just to pull that up, so you don't have to update that yourself. And then I use a VLOOKUP table from my M1 data tab, where I'm going to pull this data shortly, and you can see everything's arranged by my largest position, which is SCHD, to the smallest position. We'll scroll down here. I'll also leave a link to the M1 pie that shows what I'm invested in, and Pinnacle West is the smallest investment there at 615. So jumping back to the Google doc spreadsheet. You can see the shares. That's also pulled with the VLOOKUP table from the M1 data tab, and we're going to paste that information in here soon after I go over this sheet. We can see the current market value, my cost basis, my gain or loss, and you can see it just changed there. This is live. It's actually pulling from the market right now. And you can see my gain or loss in a percentage, nearly double my money with KKR. And here is the quarterly dividends being paid. I have SCHD marked in purple because those dividends are variable each quarter. And there's also 2 investments that pay monthly. I have those in blue, and those are O and BST. Those pay monthly. And Best Buy, I have that highlighted in yellow because I decided to sell that position in the portfolio. And then here's the current yield percentage. If I were to buy more shares of KKR, here's the current yield. Here's actually the yield on my cost. It's nearly double because I've nearly doubled my money, and that's how that works. That's my yield on cost there. And pay date, I want to know when I'm going to get paid, of course, and I have this actually sorted on pay dates. And we'll scroll down here and we'll see so far what we've done in the month. And I also have the estimated dividend. This is the high watermark that I've bought up to. You can see Allstate, my estimated dividend is higher by 3 cents. And the reason is I was paid $5.72 on April 2nd, and I took that $5.72, reinvested it back into Allstate, bought a fractional share, and now I'll get paid 3 cents more. And of course, you can see there's same with ADP, Coke, and the list goes on and on. As I reinvest those dividends, I'm getting paid more and more money. And then you can see the total dividends that have been paid to me for each of these positions. You can see BST, over $6,000 in dividends, and I'm due to get paid from BST on April 30th, as well as JP Morgan. So I'll wake up and I'll receive well over $400 for those positions. And the reason why I don't have that in there, because I haven't received the money, and it's going to be a few dollars less because I've bought up to a high watermark. I've bought a few shares, and it's going to be in the 467, 468 is what I'm estimating it's going to be. But I don't put these numbers in here until I've actually received the money itself. So we can see the total dividends paid by each position. And also I have a column here that shows the annual raise amount. These dividends are not static. Even if I stop buying, say, Allstate or ADP, you can see what the annual dividend raises have been, and I put the increased month. And some of these are marked as variable, and that means they are not consistent with a once a year dividend raise. The good news with O is O raises their dividend multiple times per year, but it's usually like 0.2%. So it's pretty small. And in some of these companies like Oracle, they seem to raise their dividend every 2 years. And then companies like BST, it's been, actually it's not a company, BlackRock, it's BST, it's a CEF of tech companies, and they're covered calls is what they're selling. So it's not a company, I misspoke there. So it's a covered call CEF, but the dividend here has been at 25 cents for quite some time, for a few years now. So I have that marked as variable as well. And some other companies like Digital Realty, it's been a few years too since they've raised their dividend. Same with NVIDIA. I'm not complaining about NVIDIA. They have a tiny dividend, and that's not the reason I hold them. You can see how I've made a nice 529% gain with just the $553 I bought shares with. It's now worth this, almost $3,500. So NVIDIA is a growth play for me, definitely not a dividend. So the 16 cents here, I'll take it, but that's not the main reason I'm investing in NVIDIA. So I have a good mix of growth in this portfolio with Apple, Microsoft, NVIDIA, things like or Broadcom. But I also have those old steady Eddie ones too, like Procter and Gamble, and like a Coca-Cola, Pepsi, Kimberly-Clark. Those aren't exciting companies at all. They're not going to be growing at near the rate that the other growth companies are going to be growing at. But I like their stable, income they provide to me, and they have a higher yield percentage as well. So though I have a good mix, is what I'm trying to say with that. So we'll go to the bottom here. Here's what the portfolio is worth live. Here's my cost basis in the portfolio. Here's my gain or loss. Here's the average yield if I were to buy shares of companies in my portfolio. Here's my average yield on cost. You can see here, here's the quarterly total. I add everything up in here for my quarterly dividends, and I have to add it in twice for the monthly payers. You can see I pull those from here. I have to do a VLOOKUP to pull the value of BST and O. Since I do those sorts on the dividend date, it throws those numbers all out of whack, so I have to kind of not hard code them, but do a VLOOKUP to pull those amounts, take this total and add it in 2 more times into the quarterly to get the total quarterly dividends. And I also have that broken down by monthly, quarterly, and annual, almost up to $11,000. And I have a few links here too that are useful to look up dividend raises and also dividend declarations. What I do is I start checking, like KKR, Aflac, Kroger. I start checking these to see if they've announced a new pay date, put the new pay date in, and resort them. Or if they've raised their dividend, I will put in their new dividend per share there and update that accordingly. And here you can see I've been tracking like SCHD from 2022, 2023, and here's the Q1 dividend from SCHD. So we're off to a good start. So an all-time high in Q1. And also tracking like the total stock market with a VTI, that's Vanguard's total stock market index. We're 3.5% above the prior high water mark, which is at 244, and that was a couple years ago. And it took us a while to get there, to get back up to that high water mark and surpass it. But with SCHD, we're still down over 5%. You can see my strategy here. Just in this portfolio, what I'm doing is I'm putting in $100 per week, and this is the Monday buy, obviously. And my dividends are reinvested right and back into the company that paid it. And I may change that, who knows, we'll see, but right now this is what I'm doing. If a dividend is cut or suspended, that stock will be sold. And here's my strategy, buy and hold. And here's my goals for 2024. You can read through these. And I was at that $240,000 portfolio value really early, but we've dropped back down. You see I have some goals for monthly income as well. I was over the $900 mark, but SCHD lowered their dividend from Q4 2023, but that's normal because SCHD historically has paid their highest dividend in Q4, and I don't see 2024 being any different, so I think it's going to rebound, and we'll see if I get up to that goal of having $1,050 a month on average monthly dividend and getting to that $12,000. Of course, I have a net worth also goal here too, and also number of shares that I want to acquire and just income from one position. So the next thing I'm going to do is I'm going to grab the data from M1. Hopefully we haven't timed out. We have not. And I'm just in the holdings tab. I'm going to grab everything from name and just scroll down. And I have a tab that's called M1 data, and I'm just going to paste this over there. And what it's going to do is it's going to align the columns for me to show my number of shares and my cost basis and average share price as well. And I'll show you how that works here. Go to the M1 data tab. I'm going to paste it in here, but I'm just going to show you something real quick how it's going to change. It's going to change these numbers as well as the number of shares, cost basis, and average cost for all the positions I bought in, those 5. So I'm going to put down the monthly here real quick and show you how that's going to change. It's going to go slightly higher, not high, not like in dollars, because I only put in $100. I didn't have any more dividend drips or anything like that, so I'm expecting maybe 20-25 cents. It's going to affect my monthly cash flow average buy. So go back to the M1 data tab. I'm going to paste that information in. Paste special values only. It takes a few seconds to update. It's done that. And now we're at $8.95.56. So it changed it by 23 cents. So pretty much right in the middle of what I was guessing. So what I'm going to do is I'm going to carry this number over the 895.56 over to my monthly average dividend tracking tab, and on that tab I track any moves I do where I buy, sell, or do a dividend drip, or if a company raises their dividend, that will affect my cash flow average. So let's go carry over the 895.56 over there. Scroll down to today. You can see the 895.33 is where we started, and then the event was a $100 deposit, and then we can see what the difference was. The 23 cents. And you can see, let's look at like on the 25th, I had Cisco and Oracle dividend drips, so that added 4 cents. Not a whole lot, but things like Southern had a 3% dividend raise that added 6 cents. And here's last week, the $100 deposit was 30 cents, and the reason why there's a 7-cent difference is I bought different stocks, and those stocks that I selected on the 22nd had a higher dividend yield, so I was buying more income. In this case, maybe I'm buying more growth as a result. So the dividend payout was lower for those 5 that I selected this week. But don't concentrate too much though on dividend yields, because as you can see, a lot of companies like to increase their dividends. You can see Costco on the 10th had a 13% dividend increase. Of course, Costco doesn't pay a high dividend like Procter & Gamble pays a better one. They had a 7% increase. That was a surprise, because I think the year prior Procter & Gamble paid 3%, so it was nice to see them come back with a 7% dividend increase. But what you can see is, just even from April, all the events that I've had with deposits and drips and everything like that, and we can see what that did to my monthly income. And the change, you can see $7.35, and that's just with $100 deposits every week. I've added $7.35 in income. So let's jump over to the dividend tracker tab, and on this tab it shows the date I started doing these videos and tracking this portfolio. The starting portfolio value is $18,700 when I started doing these videos. In the first month, I received $37.41. You can see the history of this just going down, even the quarterly history, quarter on quarter increases, and also you can see the first annual dividends I received in 2021. And look how it went up in 2022, and look at 2023, over $10,000. And here's the dividend so far paid in April, but I have BST, which is by far my largest payer, and it's a monthly payer, has not yet paid, and then JP Morgan, once those come in, it's going to be in the high fives. I think this will be probably the last month where I have a sub $500 dividend payout. You can look at April of like last year, I was at $540, so it's going to be at least probably $50 higher than last year. But we could compare, let's see here, the comparable month would be January. You could see I got $611.08. You could ask, well, why is your dividend going to be lower in April when it's essentially the same stocks? And the reason is Costco paid a special dividend of, for me, I had over 2 shares. It was $35 additional. So that kind of bolstered or made January a little bit artificially high because of the Costco special dividend. We'll take a look here. It was right here, $35.69, and that was paid in January, which kind of threw those numbers off there. But we can see the total dividends paid with the portfolio since I've been tracking this, over $14,000. And we can see the average monthly dividend. I think it's important to really show the monthly income that this portfolio can produce. We can see there was a setback in March with SCHD with their Q1 dividend, which again, it was expected, and I expect to regain that $40 and some, especially in quarters 3 and 4 with SCHD, especially 4. But we've made back $7.35 of that, and a month-over-month gain of 0.83%. So we can see the annual dividends now at $10,746, and I've increased the annual dividends by $88.24. I put in an additional $100 today. There were 5 Mondays in April, and that's the $500 there. And to close this out, I'm going to go to my total net worth tab, and you can see I started out the video from the beginning with M1 showing my IRA in there as well. I'm not sure if you guys want me to even show, what dividends I get from IRAs and like 401ks and things like that. Since I can't tap into them right now, I just reinvest those dividends back in. You can see what I'm invested in a Vanguard. I have IRA just in their ETFs. I have a Roth IRA, a very small one, again an ETF. And then here's my taxable account, more boring ETFs in there. Then here's my 401k with my current employer, and mostly invested in an S&P 500 index fund. That's the bulk of that. A little bit of bonds and stable value, things like that. And then here's what's in my IRA, which was 614,000 of that 800 plus thousand that I was showing you before. You can see it's in VU, VTI, SCHD, and BST. And here's my taxable dividend portfolio that I went over, just over the $236,000 mark. Then I also started an M1 savings account. M1 is doing a 5% savings account, so I'm going to give that a shot and start putting a little bit of money over there. Then here's my Synchrony savings account. My Synchrony account it pays 4.75%, but I don't want to move everything out just for 0.25%. So I'll start putting in some new money into the M1 savings account. We'll see how much I put into there. And here's my Capital One checking and savings. This is a spending account where I'm spending money out. I probably have too much money in this savings account. Since it only pays 4.25%, I should probably slide some more of this over to Synchrony, which pays 0.5% more. Then here's my home value at $304,000, and then my liabilities, no balance on these credit cards, and I don't ever carry a credit card balance over and pay interest. This is $1160.76 I have on this card, but I'm slated to pay it here probably next week, because I'm just going to let the money accrue in my savings account a little bit longer before I push it on over to pay it off. So if you have credit cards, pay those things off, never carry a balance. But I put that in here just to show my liabilities. And here's my mortgage right now at 6.25%, and I have $182,000 left to pay that off. I've thought about just hitting this thing hard and paying it off, but I don't know. We'll see, because it would reduce, obviously take away my mortgage payment, but I'd still have property taxes too. But we'll see. I've been paying like $100 or a couple $100 more in my mortgage payment. I may get more aggressive, or I may not. You can see here's my total net worth over $1.5 million. Of course, this could swing and sway up and down 50%. Who knows? Any time, and I expect that it could be chopped in half, like we saw in 2008. And my advice is to stay the course. I know it's really hard to do that. It was hard during COVID when I saw, 6-figure reductions. It seemed like daily when the stock market was going down so far and so fast that they had to pause the markets. But I held steady and didn't sell. I actually started the, doing the portfolio right here. The M1, this is what I really started that with, was in 2020, right around March. I had cash to deploy, and that's when I kind of started dumping that into the portfolio. And it was good timing, especially buying things like Exxon, where I was buying in the low 40s, and that's my cost basis for Exxon, which is now well over $100. So that's all I had to show you guys, was what I bought this week. We'll go over those buys real quick again. Again, they were Starbucks, Southern Company, McDonald's, Union Pacific, and Hershey's, and also showed you what the impact was in my portfolio by increasing my dividend income. Thanks everybody for sticking to the end of this video. If you got value from this video, please click the like button. Also subscribe so you do not miss future videos. I will be doing a video probably on Wednesday recapping all the dividends I received in the month of April. I'll show you the proof. I'll go into my M1 log and show you the money actually going into the account. So I'm not just reading from a spreadsheet and showing you showing you the proof right there. So thanks again, everybody. I hope everyone has a great week. Everybody take care.